Hello, viewers. Welcome to Crypto Moonlix. And as of today, we are going to talk on the ideal situation of the Fed rates before the FOMC meeting. And also, we're going to discuss on the price of Bitcoin and Ethereum only, just as of now. But you also need to understand on what is really happening on Celsius network that might tank the market down even further. That is only on the crypto sides, but not on equities or the stock markets. Now, if I'm able to begin, I will start by explaining Celsius on what's really happening on Celsius, because I have a tweet actually can explain further what really happened. We have Luck Davis. You can check him out, Luck Davis. So he said this as of last night, and this was confirmed that Celsius has 21,960 Bitcoin sitting in a MakerDAO vault now. Came close to liquidation yesterday. Celsius were almost liquidated yesterday, and that's why they had to stop the withdrawal from their platform. They had to add their margin call. Same thing when you're trying to leverage yourself. If you'll add some margins within your trade, then your liquidation price will head back lower than where it was before. As you can see, they topped up with 100 million, moving liquidation price down to 18,388. Now the liquidation price is 18,388, and as of now, um, on 14/06/2022, we are having their liquidation level at 17,100. Around that price, they added a bit more at I think 2 to 3 hours ago. So can they afford second top up? And if this is liquidated, then half a billion BTC will be market sold. Fuck. Just imagine, half a billion BTC is being sold off the market. Quite a bit of some fear. So PS would not be surprised to see funds hurting this liquidation. You can see it on chain here. So what's happening currently? Currently, what's happening is that there's an idea within the market that they're saying that Celsius is being attacked by the Fed. They're trying to push the market further down so that they can have liquidation levels of Celsius as a decentralized finance protocol to which one can explain it, to actually have a collapse. Okay, they'll be liquidated at a level of half a billion. That half a billion is worth 517 million and 38,559 dollars. If this comes off the market, definitely will have a huge crash on Bitcoin. That huge crash might head Bitcoin back maybe even to $13,000 or 15. You may never know, or even $12,000. This will accelerate at further crash of Bitcoin to even $10,000. That means 517 million dollars will be wiped out from Celsius network, and I'm definitely thinking that that will make Celsius token dump drastically. Drastically. You may never know, maybe on a 50 to 70% loss within 24 hours, or maybe even a 15%, it depends on their own fundamentals, but I believe it will crash. So if we arrive at 17K or 18K within BTC, whether this month, and if they're not adding their margin calls, then it's wrecking season for Celsius and also Bitcoin on the short term, not on the long term. Celsius cannot determine the price of Bitcoin on the long term. But on the short term, it will definitely affect the crypto market, just like what Luna did. Luna was also part of a DeFi protocol. It crashed, and Bitcoin also came crashing with it from 38K to 30K. So this is what might also happen also if Celsius are liquidated at 18,388. Now, we need to understand exactly the idea of Fed rates before we start trading our markets after tomorrow. So what's the ideal situation of the Fed rates? Okay. And also we're going to talk about the laying off of workers from crypto industries. So first of all, let's begin with Fed rates. So the idea is understanding how interest rates affect the US market. But I'm skipping all this and we'll head over to key takeaways. Lowering rates makes borrowing money cheaper. This encourages consumer and business spending and investment and can boost asset prices. Lowering rates, however, can also lead to problems such as inflation and liquidity traps, which undermine the effectiveness of low rates. Higher interest rates tend to negatively affect earnings and stock prices, often with the exemption of financial sector. That's what's happening currently. So any impact on the stock market to a change in the interest rate changes is experienced fairly immediately. Meanwhile, for the rest of the economy, it may take about a year to see any widespread impacts. So let's understand how it's affecting the spending sector. How interest rates affect spending. With every loan, there is some probability that the borrower will not repay the money. There is a probability, not it's a must, but there's a probability. To compensate lenders for that risk, there must be a reward, interest. Interest is the amount of money that lenders earn when they make a loan that the borrower repays, and the interest rate is the percentage of the loan amount that the lender charges to lend money. Let's keep this and that over here. When consumers pay less in interest, this gives them more money to spend, which can create a ripple effect of increased spending throughout the economy. Business and farmers also benefit from lower interest rate as it encourages them to make large equipment purchases due to the low cost of borrowing. This creates a situation where output on a productivity increase. As of the CPI data when it came out, the productivity within the US market was quite low compared to how it is as of now. Conversely, higher interest rates mean that the consumers don't have as much disposable income and must cut on spending. When higher interest rates are coupled with increased lending standards, banks make fewer loans. Currently, we are seeing people holding cash, people not spending as they had to spend before. We're having the issue of increase of food prices, increase of oil, increase of gas everywhere globally. And now we are experiencing the idea of less spending within the market because the mortgages, the housing sector has even started increasing. So people will be forced to spend less in the economy compared to how they were doing it before. So this affects not only consumers but also businesses and farmers who cut back on spending on new equipment, thus slowing productivity, leading to unexpensive equipment, definitely, or reducing the number of employees. Reducing the number of employees. Remark these words. This is what is happening currently with Coinbase and Crypto.com and also Tesla. The tighter lending standards also mean that consumers will cut back on spending, and this will affect many businesses. For example, Crypto.com, Coinbase, Tesla, they're laying off workers with also Netflix. Now, let's over to the effect of interest rates on inflation and recession. Whenever interest rates are rising or falling, you commonly hear about the federal funds rate, which is coming out tomorrow, whether on a 50 to a 75 basis point or a 100 basis point, which is still under discussion. This is the rate that banks use to lend each other money. It can change daily, and because this rates movement affects all other loan rates, it is used and as indicator to show whether interest rates are rising or falling. These changes can affect both inflation and recession. Inflation refers to the rise in the price of goods and services over time. It is the result of a strong and healthy economy. However, if inflation is left unchecked, it can lead to a significant loss of purchasing power. We've already understood the causes of inflation, the effects of inflation. How should we understand how interest rates affect the US stock and bond market as we've been discussing? When interest rates rise, it also makes it more expensive for companies to raise capital. They will have to pay higher rates on the bonds they issue. For example, making it more costly to raise capital could put a danger on future growth prospects as well as near term earning. The result could be a revision downward in profit expectation going forward as rates increase. If a company is seen as cutting back on its growth or is less profitable, either through higher debt expenses or less revenue, the estimated amount of future cash flows will drop. All else being equal, this will lower the price of the company's stock. If enough companies experience declines in their stock prices, the whole market or the key indexes many people equate with the market, the Dow Jones, SP 500, will go down with a lowered expectation in the growth and future cash flows of a company. Same thing that's happening currently within the space. We are seeing a drop within stocks, that is Tesla, Netflix, Apple, and the rest. And also, we are seeing it's also dragging down equities, which are SP 500, the Nasdaq, and the Dow Jones. However, some sectors stand to benefit from interest rate hikes. One sector that tends to benefit the most is the financial industry. Banks, brokerages, mortgages companies, and insurance companies earnings often increase as interest rates moving higher. With the idea of the bonds, interest rates also affect bonds prices. As you've been seeing, it's been rising day by day. There is an inverse relationship between bonds prices and interest rates, meaning that as interest rates rise, bond prices fall. Okay, I'm hoping you're understanding that because we'll be going back to that. There's an inverse relationship between bonds prices and interest rates, meaning that as interest rates rise, bond prices fall, and as interest rates fall, bond prices rise. The reason for this actually quite straightforward. Is a bond with a $1,000 face value pays 5% interest annually with a $50 per year at a fixed rate. It is issued when prevailing interest rates are also 5%, say that a year later interest rates rise to 10%. A bond investor could now buy for $1,000 and be paid $100 per year for holding it. This means that the old bond, which pays only $50 per year, has to be worthless. So the only way somebody would be the 5% will be at a discount in the market. Now says interest rate instead fall to 1%. A new bond purchased for $1,000 would only pay for $10 per year to bondholders. The old one that pays 50 is now very attractive and the market will bid this up so that it trades at a premium in the markets. So the effect on the expectation, I'm not talking about it. What happens to market when interest rates rise? We'll know about that tomorrow. So when interest rates rise, the cost of borrowing money becomes more expensive. This makes purchasing goods and services more expensive. We are seeing a high demand within the global market as of now for consumers and businesses. For example, purchasing a home becomes more expensive as mortgage rates rises and financing growth of business also becomes more expensive as rates on loans increase. When this happens, consumers spend less, which results in a slowdown of the economy. The Fed have to protect the dollar. They won't have to protect the stocks at this point. They'll use all necessary tools to bring down inflation, as they've always been stating. When interest rates falls, the opposite effect tends to happen. We've already understood about that. Now let's go to the idea of bonds. What's happening within bonds as of today? 2-year yield bond, it pumped up again. Okay, but this is within the 1 day time frame. It's still above the 200 EMA, 50 EMA, and the 100 EMA. So it simply bounced off from the 200 EMA immediately, came back to a level of 3.412%. It's still quite high. It's been overbought with a relative strength index of 94. The stochastic RSI is also quite low on the 2-year yield bond. That means people are now investing on the short-term yields of 2 years. Let's look at it within 5 years. Within 5, we are seeing another growth is also being overbought at 90 with a level of 2.04%. Remember, they said when the Fed raises its rates, bonds will start falling. We are at a 50 basis point. We are not seeing bonds falling at this rate. So what does that mean for you as a trader or as an investor? We are not out of the woods yet within our global economy. We are not out of the woods yet. We are still seeing a high price on bonds. Are people heading over to gold? Let's see if gold is pumping. No, gold is not pumping. People are investing on bonds, not even gold. So bonds have been overbought. What are we expecting from here? We're expecting a downfall. Will that happen anytime soon? It's up to tomorrow. It's either they impose 75 basis point or 100 basis point to trickle this down drastically to maybe even 150 basis point is on the table. But I'm expecting between a 75 to 100 basis point. If it's 75 to 100, bit bearish, stocks will fall, crypto will fall a bit, and then now we can move from there. But I'll give my prediction on what I think might happen over the short term. So all bonds are bouncing up from the 200 exponential moving average. That is on the sector of bonds. Now, if you can look at what's happening within the crypto sector, we are seeing inflation affecting the markets, the crypto crash affecting the markets, having an issue of Coinbase is laying off 1,100 employees as Bitcoin prices continue to fall. This tells you that we are still quite early within the space. If you're having these kind of exchanges laying off their workers, what does that tell you? We are quite early. Okay, yes, other companies also laying off their workers, but in crypto, this tells us that we are a bit quite early within the crypto space because Coinbase has had so much, especially during the bull cycle of last year. It made a lot of cash, especially on its IPO, initial public offering. Let's see how its coin is doing. Can I really find it? I've never bothered with it. There it is, Coinbase. It has its initial public offering. So, what really happened to Coinbase after the launch? It crashed from 430 up to $52. That was its initial public offering price from 426 when it was launched back to $52. So it was launched at exactly 322, pumped up to 441, came down, had a bit of some pump in January 2022, then came down drastically. It's trying to have that retest it's trying to have that retest of the 50 EMA, 100 EMA, 200 EMA, but on different time frames, I'll know it will try to retest first of all the 50 EMA, the 50 exponential moving average. But if you can look within our relative strength index, our stochastic RSI, it's quite low. There's low volume within Coinbase, there's low volume within crypto. People are having less interest in the crypto market. Is this capitulation for crypto and stocks? I don't think so. We've just been seeing not inflation, bonds picking up. Stocks are seriously falling, even as of now. If you can look at the SP 500 as of today, it had a bit of some drop of a negative 0.41%. Dow Jones just pumped a bit by 0.27%. Nasdaq at negative zero, no, Dow Jones at negative 0.59%. The US 100 index is at 0.21. Then you're having the SP 500 falling on a level of negative 0.40. Now, just 4 months ago, Coinbase reportedly spent $14 million on a Super Bowl ad that consisted almost entirely of a colorful QR code bouncing around the screen, where they could get $15 in Bitcoin just by signing up. Now its fortunes have turned so sharply that it will lay off about 1,100 employees or 18% of its workforce. 18% is a large amount, according to a filing with the US Security and Exchange Commission. Coinbase CEO Brian Armstrong first blamed changing economic conditions that may lead to a crypto winter and waited until his third bullet to mention that the company has overhired, citing its attempt to take advantage of new use cases enabled by crypto, getting traction practically every week. 4 days ago, Armstrong responded on Twitter to an employee petition calling for the removal of Coinbase execs, calling it really dumb on multiple levels and encouraging employees unhappy with the situation or propose solution to quit. Okay. In May, that company executives included Armstrong, his follower co-founder, and COO Emily Choi and CPO Sarjit had netted 1.2 billion in share sales since Coinbase IPO in April 2021. The company shares opened at a price of 382 and are currently trading at 52. This staff reduction comes after Coinbase started rescinding job offers that had already been accepted by candidates. The sudden change left even some visa holders in limbo, as well as others who had bypassed other opportunities or arranged to leave their previous jobs. Other cryptocurrency firms like BlockFi, Crypto.com, and Gemini have also announced layoffs recently after the price of Bitcoin has gone down in each of the last 12 weeks and now sits at around $21,884 after peaking at about $69,000 last November. We haven't had any issue with Binance or KuCoin, but we're seeing other exchanges like Coinbase, Crypto.com, Gemini, and BlockFi laying off their workers. And that's the same thing that's also happened also to Coinbase over here. It's between 18 to 20% being laid off in the markets. Now, if we can check within Ethereum and BTC, we are having a huge day tomorrow where everyone is having the idea of anticipation. If we can check on our live book map over here, what are we seeing on the live book map? We are seeing large orders at a short-term trade where at 22,100, we are seeing large Bitcoin orders at 749. On the short-term frame, we are seeing sell orders at $22,800, but majority are buying at the level of 22,100 to 22K at 760 BTC. Okay. Now, if you can check the volume within the shorter time frame on this graph, you can see there was large volume spikes. When we dropped to 21,800, there has been large volume spikes, and you had two green vector candles pumping back up, okay, taking us to the lower highs of 22,395. Now we are coming back down, but where is the liquidity, ladies and gentlemen? Where is the liquidity? There isn't much liquidity compared to what we were seeing here before. So, since majority of the liquidity is at 20,100, is this a bull trap? You've seen just a few seconds ago, we had a liquidity of 760. Now we are seeing a liquidity of 906 BTC. Where is it coming from? Are the market makers trying to tell us that this is the last point where we might drop? If it's that significant on the shorter time frames, this one will drop and probably bounce back maybe even to 23 or $26,000. If you can look on the shorter time frame, even at the sell orders, the highest sell order, we are seeing sell orders at 23,000, which is worth 118 BTC. But on the longer time frame, we are seeing orders being bought at the level of $20,000, which is worth 947 BTC. So it seems a lot of people want to pick up their orders of BTC at 20K. Is this the last capitulation for us to expect on BTC with our book map, or as we should say, our heat map? Let's move over to the Bitcoin dominance. It will give us a bit of an explanation on what's happening. Now, these are my thoughts. No, it's not the Bitcoin dominance. Apologies for that. And it is. Look at the Bitcoin dominance. Just look at it. We had a Bitcoin dominance at its highest within 20, not within 24 hours, but as of yesterday, at 48.25%. Now we are seeing a drop up to 46.1%. What has happened? People have started investing on altcoins, having a belief that this is the bottom for BTC, will head much further moving forward, though from 20K to 25, 27, 30, 35. But is anyone feeling this as the last capitulation within the market? Myself, I'm not feeling it as the last capitulation because I'm still seeing people are having the belief that altcoin season is now here. Let's start investing. And what happened on the Bitcoin dominance? It dropped drastically from 48.44% to 46.12%. Which altcoins were pumping when the Bitcoin dominance was collapsing down? We had FTM as an example. If you can see, FTM pumped from 0.22 to 0.23. It was up to 0.25. That was an increase of about 15%. Now, which other altcoin also pumped on that process? Let's look at ADA. Did it really pump? Yes, from 0.39 to 0.48. People were quite bullish on ADA. It pumped directly up. You can see it's trying to retest the 200 EMA at 0.62. Let's look at it within the shorter time frame of 4 hours time frame. There it is. Okay, there it is. We came from 0.39. No, this is within the 4 hours. This is 0.39 over here. This is 0.44. When was this? Where's 0.39? Should be somewhere here. Somewhere around here. So it seems it just grabbed 0.39, pumped back up. Look at an example like ADA. Whenever ADA drops, onto this level, it pumps back immediately at 0.44. 0.44 retest, pump back up. We are up to 0.68. Drop, pump up, drop. So we've already had the idea of the M formation. M formation over here. We have an M formation within ADA from 0 to 1, 1 to 2, 2, 3, 3, 4, 4, and 5. Now, let me withdraw that to show exactly what I'm talking about on waves. Now, we've come from 0 to 1, 1 to 2, 2 to 3, 3 to 4, and 4 to 5. So it finished at wave 5 on a level of 0.68. Then what happened? We had one large dip, exactly one large dip from 0 to A to B. Now where will C head to? Where will C head to after the fifth wave? A, B, and C. Will you have a retest over here back to the level of 0.445, or we are about to break it? Now we are having a support level of ADA at 0.44 within the 4-hour time frame. Within few hours from now, less exactly within 24 hours, we're able to know what the Fed will have to say about the Fed rates, and we might have a drop. If you're dropping, I'll be able to see ADA probably falling to a level of 0.44 to 0.45, and then maybe, just maybe, we can have a bit of some relief pump after the news has been absorbed, and we start pumping back up. But if the news is too bearish, I'm expecting us to break the level of 0.445. Then we are now bearish, and this will now become our resistance, which was the previous support. That's just an example of ADA. Now, let's go to BTC. The reason why we are here is because of BTC. With Bitcoin on a 4-hour time frame, it's within a 4-hour time frame, right? Within our 4-hour time frame, we had the opening up of the stock market. It pumped up green, came back down, pumped up again, and then drastically dropped. So we are moving sideways. We are having the psychological idea of moving sideways. Why are we moving sideways also on the stocks? We're not seeing much dump within today. It's because we're waiting for the anticipation of tomorrow before the Fed ensures that they will impose any rate that they are interested on. The sideways movement will come until tomorrow. Until tomorrow. As I said in the group, in the Telegram channel, we are having the Japanese yield being opened up at between 4 a.m. I think it was around between 4 a.m. to 3 a.m. What happened? 2 hours too. It came out positively on the Japanese yield bond. Then all of a sudden, we crashed up to 20K. The idea also sell shares accelerated the crash. We crashed to 20K, pumped up to 22K. And that's why we are seeing majority of liquidity at that level of 20K. And that level of 20K, we are seeing a liquidity of 947 BTC. That means we can't immediately fall further down, maybe even up to 18K or 17K if that liquidity is still there. Immediately we'll touch 17 to 18K, those liquidities will be grabbed, the limit orders will be purchased, and now we'll be hovering around 19, 20, 21. 19, 20, 21. Bitcoin has been oversold on all time frames. If we begin at the 1-day time frame, BTC has been seriously oversold. The greed and fear index is at 8. If you look at the weekly on BTC, we're also seeing a low of 14 within our relative strength index, and also we're also seeing a low within our stochastic RSI. I'm not interested in looking at the MACD, but I'm looking at it. Are we able to retest the 200 EMA on the weekly time frame of BTC? Are you able to test the 100 EMA or the 50 EMA? Currently, we are on the loop of the 50 EMA. Let's look at it at like this on the previous times. Has this ever happened also before? Yeah, it seems. Capitulation. These are some of the capitulation I'm talking of. These are some of the capitulation that I'm talking of. Capitulation, capitulation. Have we seen capitulation on BTC on the weekly time frame? You can check out this chart. Yeah, this seems to be a nice capitulation on BTC. But might we head back further to 18, 15, then we pump back up? Yes, we might, depending on the macro factors affecting the market. If we are looking at BTC within the 1 month time frame, we're also seeing a huge sellout. A huge sellout. We broke almost our support also on the monthly, but we're having a monthly support of 19K. We arrived at, I think, is it 19 or 20? Not yet sure. On BTC, it was around 20,846. Yes. And where is that 20,846? This is a nice support of BTC at 19,861. Will the monthly support simply touch BTC at 19,861? Then we might have a bounce. Might that happen? Bitcoin has never dropped or up, has never dropped on its previous all-time high in the previous bull cycles. That has never happened before. But on the first time, we are seeing Bitcoin touching its previous all-time high. Are we having the crypto crash same as the crypto.com crash? Are they related? Are we now removing the idea of 100x, 50x, 30x within the global market so that we can have a reset within the crypto ecosystem? Then we start investing on real projects? Not yet. You haven't seen that capitulation up in the market. The Bitcoin dominance is telling us as a lot. It doesn't have to mean that Bitcoin dominance to be at 50 or 60%. We are still seeing that greed of people saying they are now buying altcoins at this cheap price. We're not seeing people saying, I am in fear of now buying anything. I rather leave it at that. That's what you're waiting for. One last capitulation. On an average purchasing point, maybe BTC might drop on a level of 15 to 20%, and alts might drop on a level of 30 to 40%, depending on the macro. issues. Micro, not that much, but on the macro issues, if anything continues happening with the idea of recession, if anything happens on the idea of the Fed with their basis point and their basis hike rates and inflation will move further down to maybe the price of even $10,000 per Bitcoin, or you may never know, even $8,000 per Bitcoin. If this continues globally, we haven't seen this kind of situation happening within 45 years. On the range of 41 years, this has never happened before. So it's a new thing in the market, and you'll see the kind of tools that the Fed will use to control inflation or tame inflation on the short term and on the long term. So I'm done with the video. I hope you all loved it. So you can, if you love the content, you can click and subscribe, share it to your friends, and I'll have to say good night. I'll do a live meeting session tomorrow during Powell's speech so that we can be able to understand what they have decided within the Fed closed door meeting. Have a nice day. Goodbye.